Hello and welcome to Commodity Champions. I am Manisha Gupta. The CERA Week Forum, which was a three-day event from October 14 to 16 in New Delhi, saw several big names. I caught up with some of them, and today on Commodity Champions, we look back at this year's edition of the event. To kick off the show, we have the OPEC General Secretary, Mohammed Barkindo, who thinks that producer countries should make sure that the demand growth from India and developing economies is protected. Listen in.
We are beginning to see headwinds in the supply-demand balance, particularly going into 2019, due largely to factors that are outside the fundamentals of oil. However, we as OPEC, working with our partners in the OPEC in the Declaration of Cooperation, had met in June and took stock of the implementation of the supply adjustment for the 18 months since January of last year, and came to the conclusion that there was need for us to change course, because to restore balance to the oil market, it's a continuous strive of all producers, due partly to some of the variables that may not necessarily be under the control of producers. As a result of that, we have been able to bring down so far our conformity levels that you refer to as compliance, which had overshot the 100% level in June to 147%. And we said, wait a minute, we had surpassed our goal. It was highly commendable. It showed the commitment of all the participating countries.
That's right. I think it's the first time ever that...
And this was the first time. And I think the severity of the downturn also had a role to play in this. So from July, we had started to relax supply in order to bring down the conformity from 147% to 100%. And this is still work in progress. But so far so good.
The very near future, we have seen the OPEC members, some of them increase production to ensure that the Iran supply gap is filled in. But on the other side, there also are concerns about the global spare capacity at levels which can actually continue to add premium to crude oil prices.
You have touched on a very important issue for the industry as a whole, and that is spare capacity, which normally serves as a buffer or an insurance against emergencies in terms of supply. Now, this is a function of conscious investment decisions taken either by producing countries or by companies, or a combination of both. And we have seen in the last couple of years, as a consequence of this severe downturn, sharp contraction in investments, especially in E&P. And with the rising demand that we are witnessing, available spare capacity is gradually but steadily thinning out.
You spoke about the world global demand as well, so put out those numbers for us as well. What is your sense on the global oil demand as we go ahead from here, and where do you see the India contribution to that?
Demand will continue to grow by about 14.5 million barrels a day up to 2014.
Per annum.
The bulk of this growth, the bulk of this growth will be coming from India significantly. Therefore, it is in our interest as producers to ensure that this healthy growth in India and other consuming countries is protected.
That was Secretary General OPEC Mohammed Barkindo on the demand and supply in the oil markets. We also caught up with Shashi Mukundan of BP, and he said that the KGD Basin deep water reserves, which is a collaborated effort with Reliance, might save India with an import worth $20 billion of gas. He also spoke to me about the timeline of this project. Here's an excerpt. I want to begin with the KGD6 production. How is that project proceeding, and what kind of a demand can it really cater to?
So it's a pretty exciting time for us because we've got 3 discoveries that we have in the KGD6 block, which we are now developing. These are pretty deep water fields, which are down in the 2 kilometers kind of water depth. And these 3 we are now starting to work on it. We've actually started drilling in the first one. So the drill ship is there, it's drilling the first 5 wells in there. In addition to that, by December we'll have the vessels coming in for laying the pipe. So our first set of vessels for implementing the project will start coming, and then during this winter months we will do this. Now, I don't know whether you're aware, one of the challenges we have in the Krishna-Godavari basin and in the deep water is the fact that you've got 2 monsoons. With the 2 monsoons, what happens is the period where you can actually work is between December and April.
Okay.
So in that time period, you've got to do all your work because, again, most of the work is done at 2 kilometer water depth. So what happens is you're using robots. So you're actually, it's almost like a Nintendo game. You've got people sitting there with joysticks, making, you can imagine, tightening bolts underwater, making sure you're doing welding underwater and laying all this stuff. And this pipe is actually coming up a 2 kilometer mountain. You're actually coming up into the land. So, so these things are all quite exciting. So that's going on, and the intent is that by 2022, which is the 75th anniversary of our independence, we will be producing a BCF a day of production. So in Indian terms, that's about 35 million standard cubic meters a day. That should roughly be 10% of the projected demand in 2022 for India. So we're quite excited because we're playing into this, and it's something really material, both for us as well as for the country.
Shashi, I don't want to push you so much on numbers, but how cost efficient is all of this that you just talked about? What kind of investments are going into it, and what is the plan really as we go ahead?
So these 3 projects together, if you recall, we talked about a 40,000 crore investment. So it'll probably build up to a 40,000 crores. And then what it does is, again, it'll produce about a BCF a day of gas coming out. This investment will happen over the next 4 to 5 years. So by 2022 we'll finish up. It also gives you almost 10,000 jobs, and these are jobs which are skilled jobs that you'll create. And from a country standpoint, this will avoid almost $20 billion of gas which you would have otherwise imported. And that is, I'm assuming, at a $50 price. So you can imagine at an $80 price that will be even more attractive for us. So from a country standpoint, this really helps, and this will allow us to start building gas to all these CGDs that are being licensed out. The government has come up with 86 licenses. This can go into that. It can go into the fertilizer industry, because fertilizer today imports LNG and is using our gas. Again, it's made in India. It's Indian gas, done by us. So it helps.
There's another conversation around the forum, and that really is about on how much can we see a mix of crude oil and gas here. Clearly the initial rhetoric was on how much can we replace. How will you play with those words, and what does really seem to be a more realistic approach here?
So the way I would look at it is, India is growing at 7 to 8%, and pretty soon we'll probably be into double digits. We need all forms of energy. We cannot say I'll do only this or I'll do only that. The intent is that long term we want to try and do this in a responsible manner. And you can see the government is coming up with with the idea that they want to get more renewables into the picture. We talk about gas. So I can see this transitioning to a place where you will have predominantly renewables and gas playing in. Liquids, you will use oil, but the whole intent is, can we reduce the amount of oil consumption, because 80% of the oil is imported today. And if you replace it with gas, what happens is gases on a BTU basis is cheaper. So you will save a lot of money. So the numbers people talk to me about are, they say, okay, if I replace 10% of the oil that's coming in today with gas, and that's not even with domestic gas, if I replace it with imported LNG, I will still save about $4 billion.
He expects United States to be the long-term reliable exporter to India once the Iran sanctions kick in. He also mentioned why Pioneer Resources is divesting its partnership with Reliance. Here's that conversation.
I do understand that you've been talking to Reliance. There are more companies now looking to be part of the U.S. shale drilling, etc. partnership. How has that been working? What kind of investments, and how do you look at these partnerships, these interests rather?
Yes, our partnership with Reliance has been excellent. It's been going on for 7 years. We have both announced publicly that we are divesting. For different reasons. We're divesting of our partnership interest because we have too much in the Permian to invest, the Permian Basin. It has better returns than the Eagle Ford, and I think they're divesting because they're investing more and more capital in India, both in the downstream and also in telecommunications. But it's been excellent. Most of the U.S. shale plays started with foreign investment from companies all around the world, whether it's from India, from China, from Europe, but most of that's how the U.S. shale, because we needed lots of capital, the independents in the U.S. And so initially all the joint ventures were done with foreign companies coming in.
What is that India can stand to learn from the U.S. shale boom that we saw?
Yes, I'll talk mostly about one of the biggest risk on U.S. shale that we had to solve was water. Secondly, you have to open up, you have to deregulate the industry and allow them just to, we're regulated in the U.S. by our states. And so I think India is going through that, and the Prime Minister has done a good job of deregulating, allowing the industry to move forward quickly. You have to have great infrastructure, pipelines. And then the last big item is sand. You need lots of sand. Because it's the proppant that we use to open up the fractures during the fracking process. And so we use millions and millions of tons of sand per well. And so you have to have a location of sand. So you need a water source and a great sand source.
How do you see India, the kind of demand that we have and the kind of production which is nowhere near the kind of demand, the kind of dependence that we have in the international markets? How do you see, in that sense, U.S. as a partner to India, as in sense of exports to India now?
Yes, as you know, the U.S. has become a large exporter. We removed the crude oil export ban in 2015 under President Obama, and our exports have been as high as 3 million barrels a day recently. We're averaging 2 million barrels a day this year. And for instance, Pioneer was just contacted recently for us to be able to export our first cargo of crude oil to India. So they are taking U.S. crude. It is light, sweet crude. It does fit into all the refineries, and especially with the Iranian sanctions coming up in the first week of November, that U.S. will be a long-term, reliable partner. U.S. production is already at over 11 million barrels a day, come up from 5 million barrels a day, and 7.5 million is shale. And that's projected to get on up to 17 million barrels a day. So U.S. is now the largest producer of oil in the world and will be the largest producer for the next 20, 30, 40 years.
So what is the quantum of exports to India right now, and where can we see it going as we get into the next year?
I saw, for example, I saw China a year ago. If you look at the numbers, they were importing no crude from the U.S. Today they were importing 350,000 barrels a day. So far in the tariff wars, there's been no tariffs put on oil. It's still important to China, but they've gone from 0 to 350,000 barrels a day. I can easily see India go from 0 or very little minimum amount of oil to 350,000 barrels a day. So it's a very good comparison. And one thing I learned from the meetings in the last, I knew India was growing. It's the fastest growing economy in the world, but it'll probably end up being the #2 economy in the world at some point in time, in the next 10 years. People are projecting, and they'll probably be they'll probably pass China at some point in regard to crude oil demand and needs.
That was Scott Sheffield from Pioneer Resources, but I also caught up with the Vice Chairman of IHS Markit, Daniel Yergin. He expects that the uncertainty around the crude oil prices will last till early 2019, with more nervousness in the markets around the 4th of November deadline. Remember, that's when the second round of U.S. sanctions against oil supplies from Iran kick in. Dr. Yergin also said that he expects crude oil prices to hover around $85 per barrel in the fourth quarter of the current fiscal.
Dan, what's your also sense on the crude oil prices going forward? I understand, as you said, there is a lot of uncertainty and the range has just gotten so broad here. But year on year, as you know, on how the crude supplies would be and the demand as well, you have worked with those numbers.
Yeah.
It's just going by that.
Yeah. And demand is, demand is going to weaken some with higher prices. People, people forget price really matters. Price goes down, demand goes up. Price goes up, demand. Now there's a lag factor to it. So I think, the kind of, unless something really unexpected happens in the world, I think the maximum period of sort of uncertainty and high prices will be as we go into the end of this year and early next year. And then as demand goes down, as we come out of the winter and people start seeing this new U.S. supply coming on, that will bring down the price. I mean, I think we're, you do this every week and you change your estimate. But I think, we show prices in the fourth quarter in a kind of orbit around $80, $85, maybe a little lower if we start to see slower demand. This all assumes that something else doesn't happen. Because the one thing that the market worries about, and that gets reflected in the price, when the spare capacity is there, that extra production, that's good news, and it's positive to have it, but it also sends a message that the spare capacity is getting smaller, and then if something else happens, the shock value, because as the Saudi petroleum minister Khalid Al-Falih said yesterday, this is the shock absorber of the system, and it's primarily in Saudi Arabia right now. I mean, we can see some additional production coming from Russia and other countries. So I think, we're now in mid-October, and I think next couple of months will be tight, and there will be uncertainty, and there will be a lot of volatility as we get close to that November 4th date. It's a big issue for India, but it's a big issue for the whole global market.
Global markets. So do I see a word of assurance there that we are not going to, even if we see a spike in crude oil prices, we won't stay there? And you are saying that 70s and 60s as we go ahead perhaps would be back?
Yeah, I mean, and maybe we'll be back talking about a $65 to $80 range, something like that. I mean, we see starting in September of 2019 to March of 2020, we see a lot of additional oil coming from the United States. It's all backed up right now. And so I think if the market has that in mind, it's, because the markets work on expectations, that will be a factor even earlier in 2019.
And from crude oil prices to LNG, where Tellurian's Vice Chairman Martin Houston believes that LNG will be short in supply for the next 4 to 5 years. He also speaks about the near-term price volatility and why he loves India as a market for him to sell.
There's no doubt that LNG is becoming in shorter and shorter supply. There's a good reason for it. Only very few investment decisions have been taken in LNG recently, and it takes a long time to get a project from inception to get it on stream. So it's going to be, this condition is going to be with us probably for another 4 or 5 years until new supplies over and above what's being developed in construction at the moment comes on stream. So I think we are in for a period of increased price volatility going forward, and access to supply is going to be important.
What do you really derive from the kind of direction and dialogue that India really seems to be taking in? And do you really see the policy reforms a solution to the kind of imports, demand, and the ballooning import bill, the population, all of that really seems to be tackled?
It was said fairly firmly by some of the state chairmen that we do have a lot of new import facilities being built, that we do have a lot of new 9,000 kilometres of gas pipelines under construction. All of this is great progress, and all of this will lead to more gas in the economy. However, the key points, I think for me, and one of my great takeaways here is that this is a price-sensitive market, and local markets need local prices. And you know, what we have to find as an industry is a way to find a local pricing solution that suits India. 15% gas penetration is what the administration is rooting for. Balanced with coal, but clean coal.
India for some time, I understand, is trying to get its mix right, whether it's in sense of imports or whether it's about burning this fuel. What is the sense that you got on how well are we in that direction?
You've had changes in the legislation around E&P, and that's, you know, seems to be improving the attractiveness, if you like, of India as an E&P destination. And then we've got to tackle the imports. So the imports need, you know, infrastructure that does exist today, but we need more.
And a lot of investments.
A lot of investments, and also, by the way, it needs transparency in the market. It needs a slow deregulation to a point where the market starts to set its own prices. So, you know, a lot of work to do, but you know, for me, I'm very optimistic. I mean, I ended my session yesterday by saying, you know, as a seller, I love this market because it's big, it's growing, and challenges it may have, but it's very attractive for a seller.
So a final question, Martin. Is there any other market which is growing like India and which has an equal bullish forecast projections as strong as India, really?
Well, China.
Okay.
I mean it's the
neighbor.
It's the whole India-China thing all over again. And China's growing at an extraordinary pace. Okay. But the same sort of levels of gas penetration. Gas penetration here in India is about 7%. Gas penetration in China is about 7%. So it's about the same. China has said that it wants to go to 10%. India has said it wants to go to 15%. Actually, in real terms, that's probably about the same. But you know, they're both fast-growing markets, and they're both pulling new supplies of LNG, which is good for everybody.
And with that, it's a wrap on this edition of Commodity Champions. Thank you so much for watching.